Hello there. Well, we recently had the coronation of King Charles III, and I'm sure most of us appreciated the extra bank holiday. Interestingly enough, there's some evidence that shows that an extra bank holiday tends to have a bit of an impact on the UK economy. Generally, in the past, when we've had extra bank holidays, for example, for the Jubilee, we've had the economy actually shrink during that month, although it tends to bounce back the following month. Now, the outlook for the UK economy has been a matter of some debate recently. We recently saw the IMF come out and say that they thought the UK would shrink this year and then see pretty sluggish growth for the next couple of years. And that's in contrast to the rest of the world, where they're expecting some pretty decent levels of growth. So why is it that the UK is seen as likely to underperform some of our developed nation peers? Well, there's lots of reasons potentially, lots of reasons for debate, and you can of course debate whether or not the IMF is likely to be correct. But one thing is true, is that certainly appears to be true, that the high levels of inflation we've seen globally have had more of an impact here in the UK than perhaps in some other countries. We've had higher inflation, or inflation peaked at a higher level than it did in the Eurozone, for example, or in the US. And whereas we've seen in those areas, those inflation has been falling for quite a while now, in the UK it's been fairly stubborn. Now the good news is that should start to drop out, some of the inflation should start to fall soon as our energy prices start to come down again, and hopefully we should see some falls in food prices in the near future, and those are the two areas that have been really driving inflation. That, of course, has had a detrimental impact on the UK economy. But there have also been other things going on. For example, here in the UK, we've seen a reduction in the number of people working, and an increase in the number of economically inactive people who we'd see of being of working age. And that's very different here in the UK to what we've seen in the rest of the world, where generally we've not seen that trend. And again, a matter of debate as to why that's the case. There's perhaps an element of ill health, backlogs in the NHS after the pandemic. There has been some people choosing to retire early. And then there's perhaps Brexit-related issues, such as people going home during the pandemic and then just choosing not to return, and all sorts of other issues that may be affecting the UK economy. But it is one of those things that is a perception around the world that the UK economy is weaker than some other parts of the world. Because of Brexit, because of some of the political instability we saw last year around the mini budget, and all those sorts of things have all added up to this perception of the UK economy as being weak. And that has meant that UK asset classes, whether it's equities or property or other asset classes, generally looks quite a lot cheaper than asset classes or equivalent asset classes in the rest of the world, as investors really have been avoiding the UK. So, for example, we've seen Arm, who is a big microchip designer based in Cambridge. They were previously listed in the UK, and then they were bought by the Japanese conglomerate SoftBank a few years ago. Well, SoftBank is now looking to sell them again. And despite lobbying from the government and the London Stock Exchange, they've decided not to list Arm back onto the London Stock Exchange. They're going to list them in America on the NASDAQ instead. The reason being, because they will get a better price, they will get a higher price by listing in America than listing in the UK. Not because it makes any difference to the company is the same company no matter where it's listed, but the perception is different. So, are there any reasons to think this might change? Well, we are seeing some evidence that perhaps some of this is starting to change, in that some of those UK assets are looking so cheap that bargain hunters out there are starting to see the value and starting to try and buy them. In particular, we've seen a lot of the large private equity houses come out and bid for some UK companies. And in particular, we've seen them bid for some UK real estate companies. So, for example, we saw Industrials REIT, which invests in, as the name suggests, industrial properties. That was bid for by Blackstone, and that went to a huge premium to the share price immediately. And then there's one that we hold in the portfolios. It was held in most of the portfolios until recently. The Civitas Social Housing Trust, was bid for by another private equity buyer, this time from Asia. And again, that saw the share price jump dramatically overnight, which was nice for us. We were able to sell it, and we've sold it at pretty much what the takeover price will be, and so that gave us a bit of a gain overnight. But more to the point, it maybe illustrates that international investors are now looking at the UK and saying, maybe we can see some bargains out there. Maybe things aren't quite as bad as the sort of price of those asset classes suggested. And if that's the case, then that could be a catalyst for UK stock market to do that little bit better. So I think there are reasons to be cheerful as to why the UK has underperformed recently. We can continue to debate that, but hopefully things will look a little bit brighter from here, as inflation should now start to come down throughout the rest of the year. So thanks for listening to me today. Hopefully we'll see you again next time. Thanks.